Good evening, Garage Gang. You know what time it is? Tuesday, January 6th, the nightly recap. And tonight, the market's doing that thing where it smiles at you while it hides a crowbar behind its back. Because on the surface, records, confidence, risk on. But underneath, gold is screaming, bonds are nervous, and crypto is sitting at the starting line, revving like it's about to commit a felony. So if you're here for bedtime stories, wrong channel. If you're here for the real read, welcome home. Now, smash the like, smash subscribe, and share this with your fellow crypto bros. You know the one, the guy who doesn't chase memes but somehow always buys the top. Tell him Triple X has been in the trenches pulling out gains. And if he's mad at that statement, perfect. He was the liquidity. Now let's pop the clutch and get into it. Gold just surpassed 4,500. Whether it's exactly that number or hovering under it, the message is the same. Gold is pushing into something is off territory. This is what gold does when the world gets louder. When geopolitics gets messy and the market starts thinking, if it can happen there, what else can happen next? Capital runs to insurance. Gold is the oldest insurance trade on earth. It's not hype, it's trust. Add rates on top. When cuts are expected, the opportunity cost of holding gold drops and gold catches a bid. That's why you can see stocks ripping and gold ripping at the same time. That combo isn't everything is fine. Its liquidity is strong, confidence is fragile. And central banks don't buy gold because it's trending. They buy it because it's hard to freeze and hard to cancel. That's the quiet bid under this move. Now, CNBC says XRP is the hottest crypto trade of the year, and I get why. This isn't just price action, this is infrastructure energy. Helicopter view, because I don't want to leave you hanging. XRP is built to move value fast and cheap between systems, especially across borders. Think of it like a bridge, and it's back in the conversation because the financial world is upgrading to ISO 20022, the new messaging standard banks use to send payment instructions and compliance data. Old system is flip phone texting. ISO is a full email with receipts and compliance built in. So when the world upgrades the language, the question becomes, who connects the rails cleanly? That's why XRP keeps getting pulled into the spotlight. And let me say the elephant in the room, supply shock. This whole market is a supply game. When supply gets thin and demand shows up, price doesn't climb politely. It snaps. So if XRP heats up, don't just ask, is it trending? Ask if it gets real flow and real follow through, or if it dies in 48 hours. If you want the deep ISO version, drop it in the comments. I can go 30 minutes on XRP easy. Now check this out. Sailor says strategy will stay in the index. In plain English, the biggest Bitcoin bull in a suit is still in the building. Index inclusion matters because passive money buys what's in the basket. The real question is forced selling. Tonight, it doesn't look like he's blinking. Next, Supreme Court may make the tariffs illegal. That's a market grenade. Tariffs hit inflation expectations, growth expectations, and the bond market. When bonds move, everything moves. The market will act like it's priced in until it isn't. Next, Honda and Sony are involved in a blockchain crypto reward project. Translation: mainstream brands are testing the rails because rewards and payments are business. The future is weird, and it's showing up fast. Top AI news: this isn't cool tech. This is the train. Get on it or get run over. Amazon launched Alexa.com, browser-based AI first, plugged into real partners like Expedia and Uber. That's not talking, that's executing. NVIDIA unveiled Vera Rubin, 5 times faster inference, 3.5 times faster training in 2026. Compute is the new oil, and NVIDIA is selling the refineries. And 40 million Americans are using ChatGPT daily for healthcare support. That's not coming. That's already here. Now back to the market. Risk on, reflation, but fragile. Stocks are ripping, but the 10-year yield is sitting around 4.18 and won't chill. VIX is asleep. Move is awake. Kill switch. If VIX climbs into the high teens, stop being brave and start being profitable. Liquidity is positive but artificial. Reverse repo is drained and the Fed is doing stealth support to keep the plumbing running. The engine is still on, but the tank is low. Venezuela is now a logistics trade, not a headline trade. No instant oil flood. This is a 5 to 10-year rebuild. Long the executors, but watch the wick risk. Sabotage headlines can spike oil and whip volatility. Now crypto. Bitcoin is around 92,000 coiling, funding subdued, open interest cooling, spot led. The number is 94,170. Break and hold it, and we open the squeeze zone up toward 98,000. Lose 90,000, especially 88,000, and 85,000 becomes a real conversation. ETFs are back, 697 million net inflows with BlackRock's IBIT taking 372 million. That's allocation. That's why supply shock is the elephant in the room. Now XXX picks, the shitcoin casino. We do it with tools. Axiom for sniping, Deck Screener for the tape, Bird Eye for wallets, and Truth. 2 Solana tokens. Poll, 397,000 market cap, 110,000 liquidity, 12 to 24 hours old, one wave trap, up 1,858%, failed second leg, bled out. Bounce failed live from 0.00420 to 0.00375. Lesson, not chase. Elon, 2.79 million market cap, 638,000 liquidity, 26 to 30 hours old. Clean structure. Base building, controlled lift, impulse to 0.00400, orderly pullback, now coiling between 0.00260 and 0.00280. Support is 0.00260. Resistance is 0.00400. Current around 0.00279. Contender, next 12 to 24 hours decides the second leg. That's the show. Smash the like, subscribe, and share this with your crypto bro who buys the top. Tell him narrator John said, if you keep buying the top, congratulations. You are the liquidity. Engine's hot, safety off, let it rip.